Hello, this is Dave McKernan, and welcome back here to Reverse Mortgage Live. Again, what we're going to be talking about here today is a little bit about what makes reverse mortgages so scary to folks. Um, what I want to start out with before we get into the video again, and this video is directed at consumers, just so that you're aware of that, and it's helpful, designed to be informational for consumers. But recognize that I work in the reverse mortgage industry, so I do carry a bias in regards to the reverse mortgage product. And my point in telling you that is it's key that you don't believe every person that you see on the internet who's made some sort of video that they've hosted up online. It's important that you do your fact checking and really make sure that you do your homework as you're looking to see if a reverse mortgage is the right fit for you. I would have a suggestion that you go to www.reversemortgage.org. There's a lot of great information on that website that'll help give you some more information on how reverse mortgages works. Okay, so the bank will own my home, the government's going to take my home. I'm going to lose ownership, or I'm going to lose some control of the home that I raised my family in, something I want to keep. So that's probably the number one concern that I've personally heard, and a lot of my colleagues have heard out there from people that we talk to. And just so you know, first and foremost, is that a borrower with a reverse mortgage always retains ownership of that home. And if something were to happen to the borrower, if they were to pass on, the ownership actually will transfer to the heirs or the estate of, or the home will transfer to the heirs of the estate. So ownership always remains in the hands of the homeowner, but there is a loan on that property. And something that's important to understand with the reverse mortgage that concerns people, where they say, well, I may be losing equity in my home. Let's talk a little bit about how that works and why that is. A reverse mortgage is something called a negative amortizing loan. And what that means is that the balance on the loan is increasing over time as opposed to decreasing, like most home loans that we're used to. And the reason that is, on a regular home loan that we have, on a 30-year, say a 30-year fixed home loan, we make a payment every single month, and at the end of 30 years, what we originally owed drops down to zero. Well, in a reverse mortgage, it's doing the exact opposite. What's happening is that we're taking money out of the reverse mortgage, either a lot or a little up front, just depends. And over time, we're not making a payment each month on that. So you get to have this home loan that you don't have to pay back while you're living in the home. So what's happening is the balance of the reverse mortgage is growing over time. And that's where the fear comes in for a lot of people to say, well, how much is that balance going to grow by? And is there going to be anything left when I leave my home for my family? Am I going to be able to leave anything there? So the key to understanding that is there are different reverse mortgage products out there. So some have higher interest rates and some have lower interest rates. And the way a reverse mortgage is designed is you cannot borrow all of the value out of your reverse mortgage. Because if you took all the value out of your reverse mortgage, the value of your home will grow, but then the amount that's owing is growing and would likely surpass or could surpass the value of your home. So typically on a reverse mortgage, a person is able to borrow on a government reverse mortgage usually between about 40 and 70%, depending on their age. And so there's a little bit of a spread in between the value of a person's home and what they can take out of the reverse mortgage. So the point to that is the lender and the government do not want there to be more owed on the reverse mortgage than the value of the home. So ideally there's going to be preservation of equity over time, assuming that home values will increase over a period of time and ideally stay above the increase of what's owed on the reverse mortgage. Now let's talk about a couple different scenarios with the reverse mortgage in terms of what a person owes. Let's say that a person gets a reverse mortgage, they keep it for 10 years, and in that time they owe $150,000 on the reverse mortgage. Well, what's going to happen is, let's say that at that time when they sell their home, they sell the home for $200,000. What would happen is they would take that $200,000 that they sold the home for, and they would pay back the $150,000 that was owed. So they keep $150,000. Now, scenario number two, let's talk about is, let's say that they owe $150,000 and their home only sells for $150,000. Well, essentially, they're going to pay back what is owed on the reverse mortgage, and there will be no equity remaining at that time. Now, the third example is, let's say that they owe $150,000, but their home will only sell for $100,000. What happens at that point is there's a $50,000 gap in terms of what is owed versus what their home is valued at. So what's going to happen is the government is going to step in, or FHA would step in, with something called mortgage insurance to protect the borrower, their heirs, and their estate. And so no additional debt from the reverse mortgage can transfer to the borrower or anyone else. What's going to happen is the government will step in, they will pay that $50,000 remaining to the lender to make sure that they get what they're owed, and then there would be nothing left at that point. So important to understand, you can never owe more on a reverse mortgage than the value of the home. The key question, though, that people ask is, well, this is going back to the fear that we hear a lot of times, is there's going to be nothing left for my family. And that's a common fear that we hear from people. And the question is really going to be in that, or the answer to that is, there going to be anything left? It's going to depend on a couple different factors. It's going to depend on home appreciation rates over a period of time, because as everybody knows, right now we've been in a declining home value market, especially certain segments of the country. Also, what's going to depend on that is how much a person has withdrawn from the reverse mortgage. Did they take everything available out day one, or did they just take a little bit over time, or have they not taken much out? It's also going to depend on the product that they choose. So some products have higher interest rates than others, and so again, this is where I'll recommend that you really want to sit down with a good professional reverse mortgage specialist, who they'll be able to help advise you and show you some numbers and actually walk through scenarios to show you, here's some potential things that could happen in 5 years, 10, or however long the time frame you want to look at.